Let me come back to the precious metals and palladium and platinum and why you like those metals. Bitcoin then, let's finish off on Bitcoin. Your outlook after 120,000, what's next?
Well, if they people keep bombing each other, Bitcoin is going to remain strongish. I don't see 250,000 like the maxis see. Next stop 250,000. If a little bit of peace breaks out, it's going to go back under 100,000. And I would still say that now it's hit 120. My target is 60. So
why is Bitcoin dependent on geopolitical volatility?
Well, because if you're a minister of somewhere in somewhere that's getting bombed and you take your $300 million worth of ill-gotten gains, you're not taking that through the airport, are you? You're taking it with Bitcoin. And you'll pay a high price because you need it quick. And every time you see one of these things, every time you see Bitcoin go like that, just count to 10 and something nasty happens. Time and time again. Every time Bitcoin goes like that, something wicked this way comes. Because it would be. Bitcoin's for flight. It's the only way you're going to get through an airport with $100 million. No other way. And, in Afghanistan, which was the spike before in the last cycle, some minister left $5 million in cash on the tarmac because he couldn't stuff any more stolen stuff in the helicopter. You can look that up. $5 million in dollar bills left on the tarmac. You don't have that problem with Bitcoin, do you?
Are you then saying that stocks are also going to continue going up if bombing continues, given that stocks and Bitcoin are correlated still?
Well, I would say that if M2 keeps going up, definitely. Yeah. Because what you're seeing are these markets are juiced. They're juiced with money supply because countries have found a way of getting money into the system that actually, filters down, does its job, and doesn't create as much inflation as printing it and handing it out to everybody.
Well, that's
what
very
QE is all about. And it goes into equities. It goes straight into equities, and funny enough, real estate. And everybody in government loves real estate, and probably they've got their fair amount of equities too. And that way, it doesn't cause disastrous inflation, and it's a controlled way of running big deficits.
That begs the question as to which assets do well when money supply goes up. The concept is quite simple to understand. There's more money in the system. The rich, government, and institutions, they need to buy things with this extra money because that's what they do. So the question is, what do they buy? Take a look at this article. Gold has been bought en masse by central banks worldwide in 2025, on track to buy 1,000 metric tons of gold this year. Gold prices are up 29% year to date. Now, the point I'm making is, Clem, let's suppose you were given $10 billion, just airdropped, okay? Now, you want to do something with the money. Maybe retire, but you want to invest the rest of it. What are you going to buy first?
Well, it's going to be equities. I mean, it depends if you've got rising interest rates coming and you wouldn't want bonds, but bonds and equities, yeah? But you don't, gold is for war, okay? That's the thing that you have to hold in your mind. Gold is for war. So as global geopolitical tension goes up, central banks buy gold, because gold is the money of war, and you better have it in your account if it breaks out. There's no good trying to buy it at the last minute. Bitcoin is for flight because you buy it at the last minute and you head for the airport. Gold is for war. So flight is one part of international tension. I'm sure there's a lot of Iranians were thinking of heading for Dubai when they were getting bombed, right? So Bitcoin goes up because Bitcoin is for flight. But when America starts to go rah, rah, rah about China, or India starts to go rah, rah, rah about Pakistan, et cetera, those central banks have to get gold in them. They have to build up their reserves of gold because gold is for war. And you can't buy it in the last minute. You have to lay it in. So gold is for war. But if you're inflating, if you're juicing up your economy, you don't want to give it to normal people because they not only do they need to spend the money, they like to spend the money. That's why they haven't got much. They're not misers, rich misers. You give it to a rich miser, you give it to the bank, and the bank goes and buys equities and puts it into funds that buy government bonds and buy real estate, rich people's assets. And those assets go through the roof, as you've seen with real estate in the last 10, 15 years. And the equity markets go through the roof, as you've seen in the last 10 or 15 years. And then people are going, how can Nvidia be worth more than the whole of the British stock market? How does that work then? Well, it's because the market is so juiced.
Clem, as an investor, are you concerned about the high valuations that equities now show? Or maybe the valuations are fairly priced in right now? I don't know. I'll let you evaluate. At over 6,200 on the S&P, yeah. I mean, is that a sell signal for you?
No. It's not. What was a sell signal for me was when the new administration were throwing all these epithets around and scaring everybody. That's why I got out before it crashed. And I could not have believed that it was going to bounce like it did. And the miracle on Wall Street was something that still nobody can explain to me. And I believe it was the Treasury just printing money and doing their thing rather than the Fed doing it. But anyway, whatever caused that, we're back to some inverted commas normality. Now, I was saying before that event occurred that by and large, the American stock market would go into a bubble phase. Now, you could say it's in one already, but I think it's at the end of a boom phase, potentially going into a bubble phase. Now, it doesn't have to. You don't have to believe me. All you have to do is watch. If you watch and then it starts to go into what looks like a bubble, hello, we're in a bubble, and that will go vertical. And anybody that wants to trade that can make a lot of money. But don't believe it, because it'll go up like a rocket. And at some point, just like 2000, it'll come down like a rock. And we saw this year how the market can come down like a rock. But on the way up, you can do very, very well. So anybody looking to make a goodly amount of money in a short period of time, just watch out for what looks like a bubble underway. Because if it looks like a bubble, it sounds like a bubble, and it cracks like a bubble, it's a bubble. And there'll be a lot of money to be made there. Maybe it won't happen. But it's like preempting things. What could happen is ABC. And then when A starts happening, you go, oh, look, my wild idea is coming to pass. I can put some capital there. So I think there's a strong possibility that we're going to be going into a bubble, and there'll be a lot of money to be made there if you get out before it's all over.
This is one of the most hotly debated academic topics in all of finance and economics. What is a bubble exactly, and how do we spot one? Clem, what's your definition? How do you do it?
It's when it doesn't make any sense. Now, it doesn't really make sense that NVIDIA is worth more than the whole London Stock Exchange, but you can make an argument for it. But if it was to double, it's like the bubble in property in Japan was, weeks after somebody worked out that the Emperor's Palace was worth more than all the real estate in California. Mm-hmm. There you go. It's like, no, that simply can't be right. It's simply got to be a bubble. And when a sock puppet shows up on television and the company's worth a huge amount of money, you go, that's that bad. For example, let me give you an example, and everyone's going to disagree with me about this. MicroStrategy is at a premium to the Bitcoin it holds, and I haven't checked up recently, but it was 80% when I last looked. So you could short their stock and you could buy Bitcoin and you're guaranteed to win, you would have thought. That's the sort of insanity that normally marks the top of a market. They say they don't ring a bell, but actually they do. The other thing that rings the bell is when you switch on the television show, and it's a very, very stupid news show, and the headline is, stock market has done this. That is, you've really got to be starting to counting down there.